But let's talk sectors. We've got Dayanand Mittal, the oil and gas telecom research analyst at JM Financial, joining in from the sidelines of their conference. Dayanand, hi, great to have you. Neeti now. Let's first talk about, what really is going to be the shape of telcos going forward, because there's dominance by two. There is a third player. How do you think these two players, that's Reliance Jio as well as Bharti, are going to shape up, say, in the next 3 years from now?
Yeah, thanks for having me. Yes, I think telecom industry, after a long period of pain, has now has gone through a phase of consolidation, and we have seen multiple tariff hikes. So finally, all these telcos, after huge investments, are starting to make some ROCs on those investments in early double digit. We think we are in a structural ARPU growth story. ARPU growth for the industry will likely to grow at 10 to 12% CAGR over the next 3-4 years. Consolidation will continue. We think both Bharti and Jio will continue to hold on to their around 40% plus subscriber and revenue market share. So I think it's, and after a long time, we'll probably enter a phase where capex will be moderate. So next 4-5 years, there'll be huge free cash flow generation by all these companies, and that's what is driving a lot of enthusiasm, optimism among investor community. So we have a positive view on the entire space. Both Bharti and Jio via Reliance continue to be a topic in this space.
Yes, that capex ease off already is playing out, right, Dayanand? And we've seen that in Bharti's reportage as well. But what happens to ARPU growth? You think that's also going to be critical?
Yes, I think given though we have seen multiple tariff hike over the last 4-5 years, if you look at India's ARPU at about $2.5, is still 1/3 of what emerging markets ARPU is, which ranges from $6 to $10. For China, it's around $7.5. Even in terms of per capita income, if you look at our ARPU, would be about 0.9% of GDP, versus most emerging markets would be around 1.1-1.2%. So 10 to 12% ARPU CAGR over the next 3 years, we don't see much risk. Key investor debate is, can ARPU growth come down to low single digit after 3 years? We don't think so. We think it will moderate, but it will still be in the high single digit, 8-9%, primarily because of tariff hikes might moderate. But I think telcos will gradually transition from one size fit all model, where you are charging same tariff for all customers, whether they're using 5 GB data per month or 30 GB. They'll move towards a pay as you use model, where you will be able to milk customers who are using higher data to pay more, which they're not able to do now under this one-size-fit-all model. Plus 5G monetization, despite the customers enjoying 5G, because of those limited use case, 5G monetization is not happening. I guess over the next 3-4 years, use case which will evolve, and telcos will be able to monetize 5G as well. So I think these two will drive ARPU growth, even from a medium to long-term perspective, where explicit tariff hike might be more limited. So 10-12% ARPU CAGR over the next 3 years, and then maybe 8-9% for a few years after that.
Right. Dayanand, hi, good morning. This is Harsha. Give us a sense of oil and gas. What are your top picks? And give us the rationale for those. What are you liking at this point within that pack?
Yeah, so in the oil companies, oil PSUs, though OMC's momentum is in their favor right now because of low crude price resulting in very high marketing margin. Also, diesel cracks being strong because of various supply side concerns led by a lot of disruption in Russian refining capacity. So near-term momentum is in favor of oil marketing companies, but we think valuations have already catched up to those optimistic assumptions. Hence, our preference is more towards the upstream company, ONGC Oil India, where valuations are very reasonable. The CMP is discounting more like $60 net crude realization. Oil India is actually a top pick in the space. We think it's a 15-20% compounding story. One, because we think oil price should stabilize around $70 in the medium term. Near term, there are concerns on oil price, but medium term, I think it's stabilize around $70. But more importantly, it's because of major growth in their oil and gas production over the next 2-3 years, 15-20% growth that we see cumulatively over the next 2-3 years, and also NRL refining capacity, where Oil India has a 69% stake, that will triple over next 12-18 months. So this refinery should commission and then ramp up over next 2 years. So I think, given the two, Oil India is the top pick, followed by ONGC. Within OMCs, we are a bit cautious given the high valuations and also because they're getting into a huge capex spree, where probably for next few years the ROC and free cash flow would be under pressure.
Betting against the consensus here, Dayanand, is what I hear. Oil prices are not seeing the kind of traction, and you're betting on oil upstream. So give us the thesis of what the downside risks of this playing out could be, and how large do you think that those risks are?
Yeah, I agree with you. This is betting against the consensus. In the near term, next 3-6 months, maybe crude price remains soft, and hence both ONGC, Oil India share price is discounting around $60 net crude utilization. So what our thesis is that the downside risk is limited because we don't see crude falling below $60 unless we are in a global recession, which is not the base case. So the downside risk would be the stocks remain in this range. I don't think stocks going down significantly from current levels, given the pessimistic crude price assumption that's being built. That would be the key downside risk. Apart from that, yeah, because E&P projects are very complex, it tends to take longer than expected. So any significant delay in this oil and gas production growth, that would be the second key risk to these names.
Okay, Dayanand, you have a great conference. Thank you so much for your time today.
Thank you. Thank you.
Okay,